Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 26th of March 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. And it has to be said, it was a relatively quiet session on the global foreign exchanges yesterday. Most majors were marking time. There was a change in the British pound US dollar at the cable rate, the pound slipping back by 0.17%, that on a bit of Brexit uncertainty, and more news about that momentarily. Elsewhere, little move in either the Australian or New Zealand dollar. The Mexican peso gave a little bit of ground against the US dollar, down by 0.16% against the US currency. The dollar was also on the front foot against the South African rand, where it took 0.2% off of the South African currency. For its part, dollar index, though, down on the day, down by 0.17%. It was a slow start on the calendar yesterday, a slow start as far as FX was concerned. Maybe things will spice up today. Let's take a look and see what's on the calendar and events that may move the markets today. Not too much in the way of high impact data out today, but we have already had a speech from the Fed's Rosengreen, that at 12:30 GMT this morning. To come at 7 AM, the first of the day's data is from Europe and from Germany in the shape of the GfK Consumer Confidence Survey for April. Be interesting to see how German consumer confidence is faring compared to their business peers. At 07:45 GMT, we cross the border into France for gross domestic product for the fourth quarter 2018 and a look at business climate data for the month of March. At 9:30, we cross over the channel and back into the UK for the BBA mortgage approvals data for February. And then we pause until 12:30, jumping over the Atlantic for a series of housing data. That's first of all, housing starts and building permits for February, the building permits change data, and then at 12:55 it's the Red Book Index for the week of March 22nd, to look at the performance of chain stores across the US. And at 1300, staying in the States but back onto the house sector, shall we say, with the S&P Case-Shiller Home Price Indices for January and the House Price Index data for the month of January as well. At 1400, we'll have US consumer confidence data, and that's accompanied by the Richmond Fed Manufacturing Index, a chance to see how manufacturing indices are, or industries I should say, are performing in the Virginia area. At 1530, we'll have a 52-week bill auction, and then at 1800, a 2-year note auction. Once again, it'll be interesting to see how those are priced relative to the moves on Friday. 2030 sees the release of API weekly crude oil stocks. That's the private sector read on crude oil inventories. And at 2310, we cross over the Pacific for a speech from the Reserve Bank of Australia's Governor Kent. Okay then, breaking news and comments caught my eye overnight. And first of all, UK MPs have voted to take control of Parliament and its business and look for alternatives to a no-deal Brexit and the PM's plan. They will hold a series of indicative votes, if I can say that today, to determine what may be acceptable to the House and look for a way forward from here. So this is a real change from standard parliamentary procedure, and it'll be very interesting to see how that pans out. Of course, the clock is still ticking down to a no-deal Brexit. Meanwhile, US and Asian equities stabilise overnight after recent losses. Gold tested back towards $1,330 an ounce, but has sold off from here in early Asian trade. Meanwhile, France and China have signed a series of large trade deals and bilateral agreements just days after Italy agreed to participate in China's Belt and Road Initiative, for which it was rebuked by both Brussels and Washington. So a hint of double standards there between France and Italy. It'll be interesting to see how the media and the sort of political great and the good comments on those Chinese Franco deals. Right then, food for thought, something to take away with you into the trading day and beyond, and why not think about this? As we approach the end of not only the month of March, but also the first quarter of 2019, I thought it might be quite instructive to have a look at some year-to-date performance numbers. So here we are, a selection of asset classes and assets on that basis. Interesting to note that crude oil still very much towards the top of the tree, both in the form of West Texas Intermediate crude and Brent crude, despite the sharp sell-off last week. Growth stocks, tech stocks in the shape of the Nasdaq or US 100 index still up some 16% year to date. Other equity markets still performing well as well. The Dow Jones is up 10.14% still. The S&P up 12.21%. Elsewhere, the British pound, despite all this Brexit uncertainty, hanging on to 3.54% gains year to date. We talked about gold a little bit earlier. What's interesting here is that, of course, gold is an alternative investment, a sort of safe haven, a flight for money against inflationary pressures, etc., etc. Gold still up 2.94% on the year in an environment where risk assets appear to be holding their own. And speaking of assets that will typically not do so well when risk assets are performing, the 30-year bond and the 10-year note in the US, both of which have got just around 1.9% gains to the good year to date. The Australian dollar is the other thing I wanted to point out on the gainers, still hanging in there, up just over 1% year to date, although it does remain under a bit of pressure, of course. In terms of overall investor sentiment, the VIX is, despite Friday's reversal, the VIX is down 31.13% over the year to date, suggesting that risk on is still the flavour of the moment, at least in some quarters, and it will take a while to dislodge that attitude completely from investors' mindsets. Right, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of trading leverage products for you, then please do contact your Pepperstone account representatives. And as I say, do take a moment please to read this risk warning thoroughly. Thank you for your time today.